Good morning, everyone, and welcome to TradeStation's morning market briefing on October 17th, 2018. I'm Don Prattle from TradeStation, and with us this morning is Bennett McDowell of TradersCoach.com. Our presentation is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss are for demonstration purposes. They are not recommendations. This is also not an offer or a solicitation of any kind in any jurisdiction where TradeStation is not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk and is not suitable for all traders. Please take a look at the disclosure information in those PDF handouts I've posted in the chat panel regarding the characteristics and risks of standardized options and other asset classes that we cover here at TradeStation. In my notebook this morning, Dow futures are lower as U.S. stocks saw their best day in nearly 7 months yesterday. The rally Tuesday trimmed the Dow's October loss to about 2.5%, with the S&P 500 off 3.6% for the month. The NASDAQ is still down about 5%. Netflix stock was 11% higher in the pre-market this morning after it reported quarterly earnings that crushed estimates, and the important metric of net subscriber additions was well above what analysts were looking for that video streaming service. Google's streaming service, YouTube, was inaccessible this morning as users were greeted with a blank page that showed no videos or displayed a network error. They did not explain what caused that outage. Abbott Labs, M&T Bank, Northern Trust Bank, U.S. Bancorp, and Winnebago are among the companies set to issue quarterly earnings this morning, with Alcoa, Kinder Morgan, and United Rentals set to release after today's closing bell. Housing starts was just announced a little bit ago. We'll try to, I think maybe Ben will cover that number for us. Separately, the Federal Reserve will release the minutes of its September 25th meeting at 2 p.m. Eastern Time today. The next policy meeting is set for November 7th and 8th. Overseas, around the globe overnight, markets were mixed. The MSCI Asia Pacific Index added 0.8%, while Japan's Topix Index closed 1.5% higher as tech stocks provided the biggest boost to the region. In Europe, the Stoxx 600 Index was lower, slightly lower, with automakers among the worst performers and worries about the sector's earnings. S&P 500 futures, as I mentioned, are still pointing to a lower opening. I want to turn things over to our friend Bennett McDowell right now. He is the founder of TradersCoach.com, which provides education for traders in all markets, all time frames, and at all levels. Bennett is considered an expert in technical analysis and has developed the applied reality entry-exit software used by traders in over 50 countries worldwide. He has written 3 best-selling books, and he joins us each Wednesday morning to help us preview markets for the day. So I want to welcome Bennett and thank you all for coming to TradeStation.
Don, as always, thank you so much, and my pleasure to be here and welcome everybody. All right, let me switch over to screen sharing, give you a second to see my screen. I'm going to put a link up here for my summary report today, and just a couple of you let me know that you can see my screen and hear me now, okay, and we'll go ahead and get started. Good, excellent. All right, well, let's jump quickly to the economic announcements. Don did a great job this morning in his notebook, going over basically the major ones coming out. MBA mortgage apps been going back and forth. They're a little down right now. You know, rising rates is I think finally catching up to the housing market a little bit, and probably at some point we'll catch up a little further to the stock market, even though we had quite a wild week this last week in the markets. What a difference a week can make, right? So we're going to look at the charts for these Dow Jones in just a little bit as well. All right, we have housing starts at 8:30, EIA petroleum status, and the big one is the FOMC minutes today at 2 o'clock. Well, they'll announce the interest rates going forward. Now, I think it's a pretty done deal. We'll get one in December, and they promised 4 this year, and I think they're going to deliver on that. We'll certainly see what they say going forward for next year. On Thursday, we have jobless claims coming out at 8:30, Philadelphia Fed Business Outlook Survey at 8:30, and EIA natural gas report. Bunch of notes coming out, and the Fed balance sheet coming out tomorrow as well. Friday, we have existing home sales. So today we have housing starts, and then Friday we get a report on the existing home sales. So a lot on mortgages and existing and pre-existing home sales coming out. All right, we're going to look at charts today using a variety of different software tools. I use something called the ART system, called Applied Reality Trading. Many of you out there are already using it. We designed it to work on TradeStation. It's a fantastic piece of software tool that works great on for technical analysis on TradeStation platform. We also use the OWL PTF and TLM and ERI for confirmation, but we also use Fibonacci extensions and retracements to get our target zones so we can calculate our risk to reward ratios, and of course we use Elliott Wave as well. All right, let's jump in and take a look at the chart. Give that a second to load on your end. All right, first things to come here. This chart was drawn on Sunday. So I'm going to also show you the chart, live chart today. So we got a couple more days of data. But one thing we were watching, a couple things we were watching, obviously, is we had the PTF abruptly turn red because of such poor performance we had, all right, in the week just after Wednesday when I left you last week. I mean, if you remember Wednesday, the market fell apart last week. So that turned things quite a bit. We went from a bullish owl all the way down to a bearish one. And then we also created a bearish PTF. So the problem with this is that we expected to see what happened on Monday. We had an inside price bar right here. So Friday's price bar was inside Thursday's price bar. Hopefully you can see that on the chart that I'm drawing here. I've got little arrows pointing to that. As a general rule in technical analysis, whichever way the market breaks on an inside price bar, you've got about 2 to 5 days in that direction. And so on Monday, it broke to the upside. And I'll show you the chart in just a minute, the live chart. But it broke to the upside, and that statistic is proving accurate as we've had a couple days of bullishness. But with a red PTF, we don't expect this to be a new big move up at this point. We do expect this to back down and go below the low that created the red PTF. And that's how the PTF works. You find the lowest low when it's red, and there's a high accuracy, we're going lower. Now, notice we had a green PTF before, and then it went higher, as it should have, so the PTF was correct there, but then it went neutral. So once it goes neutral, it means it actually worked, did its thing, and now it's poised for another either green or red, and we got a red. So that's how that works. So we've got to see, again now, if we're going to go lower than Thursday's low, which was the low, then what does that mean? Well, as long as we stay above this key level of support here, which is 23,997.21, and if you download that report that I put up, you'll actually have this chart on the report so you can follow along. So definitely download that, okay? So this is a key level of support that we're going to watch. A break below this is going to indicate that we may have put in a wave 3 top. And if that's the case, then we're going to go probably into a major correction. If this support holds, then and the markets bounce up from here, then it will be like this area in here where we have 3 continuing. All right, so prices haven't gotten that bad yet to say that wave 3 is over, but we do have to pay attention here and watch this. Now this is the daily chart, so let's head over and take a look at the 60-minute that I drew on Sunday. And you can certainly see that those minor waves that we saw on the weekly chart are your major waves on the 60-minute chart. So we have 3 and a 4 and a 5. Now this is the high probability target zone. We almost reached it. 70% of the time, markets reach this fib extension level on wave 5. And it's between 61.8 and 100. And that's really between 27.97 and 29.473. 15% of the time they fail and end up in this area between 38.2 and 61.8. So it got into the 15% area, just shy of the 70% area. So, you know, we want to pay attention. Now on Sunday we had a bearish momentum. We had everything bearish. So it looks to us like, according to this time frame and the daily time frame, the low that occurred on Thursday has not been put in yet. So we do have to be careful about that and watch these key levels of support. Now I'm going to jump to the live chart and take a look and see what kind of activity, give that a second to load on your end there, see what kind of activity happened Monday and Tuesday. And as you can see here, the inside price bar of Friday was broken to the upside, so the market has rebounded. But check this out. We still have red down here. So we're not out of the forest, so to speak, yet. So we could have another remember I said 2 to 5 days. It could reverse today. It could reverse anytime. We've had our 2 days, basically. So we do expect it to come down, but we want to watch this key level of support here. All right, so that's kind of where we're at here. Let's quickly take the 60-minute, take a look at the 60-minute chart as well. You're going to see a lot more price bars, obviously, here, but you see, notice here, red PTF remains. All right, we do have a slight bullishness on the owl due to this little uptrend, but as long as this PTF is red, then there's a high probability we haven't seen the end of this movement down that started last week. Any questions on this? If there are, feel free to ask. All right, I'm going to skip over and just show a couple charts here. First thing, I want to take a look at the S&P E-mini. All right, let's take a look at that today and see what's cooking on that. All right, so this was yesterday's chart. What a great movement to the upside and a great trade. The ART system puts these triangles on the chart, and this is how we enter the market. We put our stops under here and trail it right up. So it was a really nice day on the market yesterday, and it did really, really well. And this is a 2-minute time frame on that. We also had some stocks we were watching, both short term. All right, we had STRL. And if we look at the 65-minute chart, it's moving to the upside. All 3 time frames on this, the 5, the 60, and the daily, all had a bullish PTF. So these were great long trades for the week this week. And we actually came out with this as a long trade on Sunday in our Moore report. So not a bad one there, ticking away. Also stocks here, we're looking at, this is BHC. And we think it's got some more highs coming, but again, it looks to us like probably on the 60-minute, we're going to head down a little bit. So you can kind of hold off until that 60-minute chart, okay, is bullish before taking one final long position into the target zone here. So I know many of you are in that as well. TC scans, we use our scanner to find all our opportunities each trading week. And it's a great scanner. We've developed 3 scanners for this, one called the Trade Confirmer, and that takes a look at the OWL, PTF, and TLM and categorizes it for us in terms of bullish and neutral based on those indicators. Then we have the Elliott Wave Scanner scanning for wave 3s, a lot of bearish wave 3s in the market right now. And also wave 5s. Check out all the bearish wave 3s. That's a daily chart. And then the Turbo Scanner is looking at all the ART signals. If we look at scans on a 60-minute time frame here, you can see even more bearish wave 3s. Great time to short the market. This is CVX still going down here. So scanner, the radar screen scanner by TradeStation is a phenomenal scanner. It's the best one out there. And it's in real time, and we programmed all our scanners to work off the radar screen platform. So definitely, if you're not using it, you should learn how to use it because it's a great way to find trading opportunities regardless of the time frame you're looking. All right, Forex, one little quick thing on the Euro USD. All right, it's basically heading down still a little bit right now. Longer term prognosis is it's going to head back up, but it's got a little short term bearishness to go to the short side. All right, let's take a look at some stocks here that you want to look at. And if you want me to look at any, just type them in caps for me, okay? And I'll be glad to get to those. We only got a half an hour, so we kind of going to move pretty quick here. All right, let's see what we got cooking. First one is EMN. And this one is for Karen, okay? Here we go. All right, so let this load. It's going to take a second while this is loading. I always look at stocks or any market that I'm about to trade on 3 time frames. That's the multi-time frame analysis. This is Eastman Chemical, and I've got the 60-minute loaded on the left, the daily loaded in the middle and the weekly on the right-hand side. And basically, if you're a position trader, this is how you would set this up. If you were a day trader, you'd set it up a little differently because you'd need lower time frames. All right, if we look at this baby here, we got a bearish wave 3 on the 60-minute. We're probably going to go into a wave 4, so I wouldn't be surprised if we had now a couple of days of bullishness, bringing it up maybe into the 90 range, and then it should sell off again. So check out how these pyramid trading points, all right, on all time frames did well. Boom, boom, boom. Your stop is here. All right, looks like it may be just about to get hit on the short wave 3. However, if you're trading longer, all right, you have your stop way up here. You're already short. You caught this big dive. But check this out. Everything is red here on the daily time frame. So with a stop this high, you just stick with it. Just stay with it, okay? Fear and greed index bars here. We had fear continuing here. That's this indicator at the bottom with the labeled F here. So it looks like it's still falling out of bed here on the weekly as well. So I would say on this one, Karen, you want to stay short, okay? And don't go long if you're thinking about a long position. Let's take a look at the ETF for gold for Albert. This is a good one to look at. And give this one a second to load here. All right, gold's popped up a little bit. We think overall it's bearish, however, but it's heading into this wave 4 target zone right here. So it looks to us like we had a 3 here. I'm on the center chart right now, which is the daily chart. Looks like probably we'll get up to 117.5 to 121.5. That's the range, and then sell off again. So everything is red here, but we're seeing a little bit of bullishness during a correction, and then it should roll over. Okay, so we're looking at that as a more of a bearish market from a position trading standpoint, which is kind of interesting because usually what happens is when the stock market does bad, people run to safer metals like gold and to insulate themselves from the stock market. And even though we see the gold market reacting to the bearish market we had last week, it shows that, hey, it's going to go a little higher, which means the bearishness will continue, which what makes sense on the daily charts and the 60-minute Dow Jones chart we looked at, which says more lows coming. So I would imagine that's going to push gold into the target zone. But then it looks like after the next low, we could see gold selling off, which means the market could then recover and go higher. So I don't, based on this, it kind of is making a case for the sell-off that we've seen in the Dow as being temporary, is what I'm saying. All right, so that's gold. Apple, let's take a look at AAPL for Amy. And Don posted something on the Option Stars 218 conference in Chicago. So check that out. Options are great tools to use, but you have to learn how to use them. So definitely check that out. They'll teach you how to do that. All right, so here's Apple. All right, very strong weekly chart. All right, the daily chart's not too bad, but it is starting to show a little bit signs of moving down. Obviously, we had a little top here. It's moving down, so the momentum's turning bearish here. And we've had this slight move, which is magnified on the 60-minute chart here. But, there's no real major concern at this point in Apple. All right, I think from a long-term standpoint, Apple will recover when the market recovers, basically. So that's, I'm not worried about Apple. TSLA, Tesla, of course. Let's take a look at that for Frank. And give that a second to load on your end. All right, 60-minute chart is bullish, so we're going up to some degree on the 60-minute chart. We had a beautiful sell-off. Check out the pyramids here. Boom, boom, boom. Beautiful sell-off, but now you've been stopped out of that short position, and now things are turning bullish. So we got short-term, we've got more highs coming. All right, let's take a look at the daily chart. A little bit on the messy side. We had a greed bar here, that was triggered. So that indicates that when that was taken out to the bottom, that indicated that was a great time to look for some bearishness. We had one up here as well. So at this particular point here, I wouldn't really recommend any trading opportunities from a position trade point. It's a little bit of a neutral type of market. There's better opportunities out there. If you're trading the 60-minute, you can go long, but again, you want to make sure here that your risk to reward's making sense, because it may not go much higher. Okay, it's going to go higher short term, but it may not go much higher. It's kind of like in this broad-based, you know, a lot of breathing required for Tesla. Not the greatest setup. So let's take a look at MO and see if there's more opportunity on that. And this is for Nick. I'm going to put the report back up while we're waiting for that to load. So if you missed that coming in, definitely grab it, because it's got some key levels of support you're going to want to look at during this week. All right, so let's see here what we got here. All right. All right, so here we go. This is Alteria. Now, what we have here, short term on the left-hand side, we've got a red PTF. So if you're considering a long trade at this point, I'd hold off until the short-term 60-minute chart turns more bullish at this point. If you're long right now, your stop is set right down here, and probably at this point, you might have been just stopped out on that pyramid there. So you took some profits from here, and now you're probably out there at this point. So again, right now, I probably wouldn't initiate a trade right now on MO. Let's take a look at MJ here. And this is for AD. All right, MJ, give that a second to load on your end. 60-minute chart is bullish, daily chart is bullish, and the weekly chart is bullish. So things are looking pretty good with more highs coming on all time frames. So definitely the ART system would have had you long already on the daily, and with a green PTF and the momentum so bullish in all three time frames, stay with it, okay? Looks pretty good. So that is MJ. Let's switch over to the ETF for oil for Chris. Give that a second to load on your end. And while this, let me just see, I got a question here from Albert. If the Dow goes through Thursday's low, then the market goes down to support at 2,300. Not necessarily, Albert. It's just saying that if it goes through Thursday's low, you know, it could go past Thursday low by a decimal point or so. PTF is not saying it's going to go down to support. It's just saying it's that low is not the final low. So we'll have to pay attention and watch at that point. I mean, it could get close to the support level, but that's why you want to keep an eye on that support level. All right, so here we go. USO, oil, 60 minutes, a bearish PTF. So short term, we're heading down again. Long term, we're neutral on the PTF on both the daily and the weekly. So at this point here, you probably don't want to take a long trade at this point because of the red PTF on the 60. But if you're in a long trade already, you know, your stop is way down here on the weekly chart because you're probably going to be in oil for a while, all right, around 13. So you got some room to move down. This low here is only going to be around, here, let me move that back up, only going to be around 14.89. So you're not talking about a huge move possible on the 60-minute. You know, maybe you get down to 14, but I don't think you're going to get stopped out on the weekly. So I think oil is still uptrending at this point. All right, NIO. Let's take a look at this one. Give that a second to load. Not too much history on this. Red PTF on the daily causes me concern, so I would probably stay out of this one, NIO, at this point. HD, let's take a look at Home Depot here for Amy. And I'm trying to move through these as quick as I can so we can get to everybody's picks here. We only got a few minutes left. Oh, and I do want to take a look at the S&P E-mini. All right, so we got a move to the upside on Home Depot on the 60-minute, but it is based off the pyramids. But we have the owl is just about to go green as well, and probably will. Neutral PTF on the 60, red PTF on the daily, so I'd stay out of a position trade at this point. All right, we've had a big move up on Home Depot on the weekly, and it looks like we're going to go down a little bit. So no long trades on Home Depot at this time. And let's move. We did gold already. Let's go to SQ. and we'll finish up with Netflix and DBA. Okay, so on this one here, what we've got is a situation where we've got bearishness on the PTF on both the 60 and the daily. And what that means probably is that what we're going to see is a 3 here. In Elliott wave terms, we're already in the target range for 4. That's between these two blue lines. We'll probably see another move down here, which is what the PTF is saying. And that is also what the PTF is saying down here. So a little bit more correction. And then after the correction, it should recover because we have a green PTF on the weekly. So if you look at this here from this standpoint here, probably a little bit more movement down. All right, you're in a wave 3. The question is wave 3 over? Probably not right now because we have such a strong PTF. So I would imagine a little bit more movement and then more to the upside. So if you're thinking, a couple things to think about. One is your bearishness on the 60 and the daily, so stay out of a long position. And the weekly, you're getting in near the end of a very big trend. So probably not the best time. Wait for this to correct and then take a look for a position. All right, Netflix. Let's take a look at this. NFLX. Whoop. NFLX. Got to type it in right. All right, so this is for John. And Netflix on the weekly chart has been on a tear to the upside. We still have a green PTF. You'll see that loading in just a moment. Had a gap up this morning, it looks like, on the 60-minute, and a red PTF on the daily. All right, so here's what I would do. I think we're probably heading back up. That PTF has to turn green or at least yellow before initiating a trade at this point. So I would hold off on that. So that concerns me a little bit that this gap movement up that we've had today looks like we're going to go a little higher, but I'm not so sure we're out of the woods on this correction. So we may have a 3 here, an A, B, and we may roll back over for a C and then go higher. That could be the scenario. So I'd have to wait for those conflicting signals to work the way out. All right, DBA. Time is up, but I just want to take a look at this one really, really quick. So I think this is the first time we've gotten through all of them, which is great, but we certainly had to move quick to do it. All right, so we have green PTF on the 60. All right, you've already had a mature trend in place on the 60. You've got a nice movement up on the daily. My concern here is that this could be a corrective move on the daily. So we'd have to really take a look at this here. To analyze just what the target range would be. See, it's been moving down quite a bit, so we're due for some type of relief. You're getting that now. So you could go long, just making sure you use your stops in place, but I'd also want to take a look at a little bit better of an Elliott wave count before doing that, but we've been in a long movement down also on the weekly chart, so it may be ripe for a nice trade to the upside. At least the 60-minute is definitely indicating a short-term trade as well as the daily at this time. All right, we did it. We got through all the markets. Let's quickly take a look at the S&P E-mini and see where that thing is opening up. See if I can go down here in the 2-minute and find it. Boy, can't find it. Okay, let me go to the 10-minute, see what we got cooking on there. That hasn't rolled over yet. Okay, so looks like pretty much I would say not really a gap or much going on. I'd say pretty no gaps, pretty basic market. It opened up here, trending sideways, so no movement either up or down. That's very extenuated right now. So pretty level open at this point. All right, so that's kind of the end of the market here, and we'll turn it back on to you. And I thank everybody for coming. We'll see you next week. Use risk control. Definitely pay attention to the Fed this afternoon if you're day trading. A lot of volatility can be created there. All right, I put that report back up for you to download if you want those support levels, and we'll see you here next week. Have a good one, everybody.